Binance may be the largest cryptocurrency exchange in the world by a wide margin, but that doesn't mean that they're safe right now. Binance is facing some serious issues right now that I believe could put the company and its customers' assets at risk. Ever since the collapse of FTX and the discovery of the widespread fraud that occurred there, Binance has been in the global spotlight and in the crosshairs for government regulators who are heavily scrutinizing Binance's major involvement with the collapse of FTX. For those of you that don't know what I'm talking about, Binance's CEO Chanpeng Zhao, who's better known as CZ, contributed to the run on the bank that happened at FTX with this tweet from November 6th, announcing that Binance would be liquidating the majority of their position in FTX's FTT crypto token. This public announcement that Binance would be liquidating its stake in FTX's token came after the bombshell CoinDesk report that showed that Sam Bankman-Fried's hedge fund, Alameda Research, had a balance sheet that was full of FTX's tokens. The fear that Binance would be selling its entire stake in these tokens on the open market contributed to the panic about FTX's financial position, which made the run on the bank that much worse. After it became clear that FTX was about to collapse, Binance would then later announce a non-binding letter of intent to acquire FTX and bail the company out after it couldn't meet customer withdrawals. However, just a day later, Binance would pull a complete 180 and back out of the FTX acquisition. The company simply said in a statement that, quote, "As a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged U.S. agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com. In the beginning, our hope was to be able to support FTX's customers to provide liquidity, but the issues are beyond our control or ability to help." End quote. Because of Binance's extensive involvement with FTX's collapse, the company has drawn significant scrutiny from government regulators in recent months. Some people have even gone as far to claim that Binance deliberately tried to cause a run on the bank at FTX to eliminate its main competitor. But even with the extra scrutiny in recent months, it's not like Binance's problems with government regulators are a recent development either. The US Department of Justice has been leading a criminal investigation into Binance since 2018 for possible money laundering and criminal sanctions violations. And this really shouldn't surprise anyone, because Binance's origins are sketchy to say the least. Binance's aforementioned CEO, who goes by CZ, founded the company in 2017 in China originally. The bulk of Binance's business early on was coming from two markets, China and Japan. But Binance did not even have a license to operate in Japan at the time, despite the fact that it was one of its main markets. From the very beginning, CZ forced Binance's employees to be secretive, and did not even allow them to mention publicly who they worked for or where the company's offices were located. When a cybersecurity company in 2018 asked for Binance's address, CZ told the employees to give them an address in the Cayman Islands where a holding company had been set up, even though Binance's actual day-to-day operations and staff were in Asia. This level of secrecy should raise some serious concerns. To state the obvious here, people only keep secrets when they have something significant that they want to keep from becoming public. CZ has been deliberately working to slow down the Department of Justice investigation and evade regulators for years. These efforts include continued strict secrecy for Binance employees, even going so far as including instructions to use email as little as possible, and to communicate using encrypted messaging services. One of CZ's preferred encrypted messaging services is an app called Keybase that featured automatic self-erasing messages. That sounds familiar for some reason. I wonder why. The secrecy doesn't stop there, though. After the FTX collapse and fraud were discovered, Binance quickly tried to restore faith in their platform by showing that customer assets were safe and hiring an accounting firm to do a proof of reserve statement, which would essentially be the accounting firm attesting that customer assets were backed one-to-one. However, the accounting firm that Binance hired to make the proof of reserve statement would delete it from their website not long after, and they announced that they would pause all work with cryptocurrency companies for the foreseeable future. In a statement to CNBC, the accounting firm said that it had, quote, paused its activity relating to the provision of proof of reserves reports for entities in the cryptocurrency sector, due to concerns regarding the way these reports are understood by the public. End quote. The statement added that the proof of reserves reports are performed in accordance with reporting standards relevant to an agreed-upon procedures report. The statement then explicitly said, quote, "They do not constitute either an assurance or an audit opinion on subject matter. Instead, they report limited findings based on the agreed procedures performed on the subject matter at a historical point in time." End quote. Good luck trying to add more qualifications to that statement. In other words, the scope of the report and the information available to the accounting firm was so limited that there's no way to actually know for sure whether customer funds are actually safe. The proof of reserves report also only covered Binance's Bitcoin, and not any other cryptocurrencies that impact the company's finances. John Reed Stark, a former SEC regulator, also noted that the accounting firm acted based on agreed-upon procedures requested by Binance, but the accounting firm deliberately did not comment as to the appropriateness of the procedures in the proof of reserve documents. He compared this to bringing someone into your house to inspect it for fire safety, only for them to tell you that they are not sure whether their inspection procedures were any good, which I think is a very fitting analogy for this case. Since Binance was unwilling to be fully transparent, the accounting firm could not do an actual audit or anything substantial with Binance's books. Because of this, the accounting firm retracted the proof of reserve statement to avoid more public confusion. And it's not just accounting firms that are unable to see Binance's books. Chanpeng Zhao is hiding this information about the company to the point that even Binance's former chief financial officer did not have full access to the company's financial accounts. Let that sink in for a second. How are you supposed to be the chief financial officer for a company if the company won't even give you full access to its finances? And more importantly, what is CZ so desperate to hide that's leading him to withhold this information from even other company executives? Binance is a private company by choice, so they also do not report any figures such as revenue, profit, cash reserves, or how much of their own crypto tokens that they've created are on their balance sheet. The company doesn't even disclose where it's based. And the transparency into Binance's books and operations is desperately needed. An analysis from the co-founder of blockchain analytics firm Chain Argos showed that the stablecoin Binance created was not fully backed during large parts of 2020 and 2021. For context, a collateralized stablecoin is supposed to keep its peg to a US dollar by being capable of being redeemed for $1 worth of value from the assets held in reserve at any point. So the fact that it even looks like the stablecoin may not have been fully backed by reserves at any point is a really bad look. After this blockchain analysis was published, a Binance spokesperson even admitted to Bloomberg that, quote, "The process of maintaining the peg involves many teams and has not always been flawless, which may have resulted in operational delays in the past," unquote. The spokesperson then claimed that the process has, quote, "been much improved with enhanced discrepancy checks to ensure it's always one-to-one pegged," end quote. Binance claims in their blog post addressing the issue that the stablecoin collateral, quote, "has not always been stored in a single dedicated wallet in real time, so that the one-to-one backing was not always immediately visible to users," end quote. But the problem is that there is really no way to be sure that the stablecoin was backed one-to-one like Binance is claiming, because the company's not transparent at all. You just have to take their word for it. And based on everything else that I've seen from Binance, I would take their word with a grain of salt. And remember, Binance only admitted that the stablecoin wallet they used was under-collateralized after an independent blockchain analysis discovered it themselves. Otherwise, this issue would have never been brought to light. And this brings out the obvious question about whether there are other things happening behind the scenes at Binance that are being kept secret by the company. This secrecy and lack of transparency at Binance is a major problem. This extensive secrecy all seems to be part of an effort by Binance to evade government regulators and avoid scrutiny. And make no mistake, Government regulators are after Binance, as is clear with the ongoing investigation by the Department of Justice. A few weeks ago, the DOJ announced a press conference concerning what they described as a major international cryptocurrency action. Then they surprised everyone when they announced criminal charges against Bitslotto, a tiny Hong Kong-based cryptocurrency exchange that most people had never heard of. The DOJ said that Bitslotto had laundered $700 million in tainted crypto tied to the dark web. But while a small crypto exchange getting prosecuted isn't shocking, the more interesting aspects are in the details with Bitslotto. Bitslotto's largest counterparty for its transactions was Binance. Blockchain data shows that tens of millions of dollars from Bitslotto ended up on Binance's platform, despite Binance claiming that it has thorough anti-money laundering processes. This raises a lot of questions, because Binance's own anti-money laundering vendor Chainalysis had previously estimated that 48% of Bitslotto's 2019 through 2021 cryptocurrency receipts were illicit or risky. So what actually happened here? Did Binance knowingly act as a counterparty to Bitslotto even though their vendor had said that it was quite possibly a criminal platform? These are the red flags and kinds of questions that I'm sure the DOJ is looking into very closely. The fact that the DOJ prosecuted Bitslotto might be a stepping stone for them to further build their case against Binance, since the exchanges had transactional ties with each other. The regulatory crackdown on the entire crypto industry is not taking place just through criminal charges, though. Many crypto companies are also facing issues with their banking partners. On January 3rd, the Federal Reserve, FDIC, and Comptroller issued a joint statement together talking about the risks of cryptocurrency and how these risks cannot be migrated to the banking sector. Since then, the US government has been consistently cracking down on crypto from many different angles. The crypto-friendly Custodia Bank had its application to join the Federal Reserve System unexpectedly rejected. The Federal Reserve also issued a statement making clear that banks need to ask for permission before engaging in any crypto activity. This means that any existing crypto-friendly banks that had been servicing crypto exchanges are quickly reevaluating their involvement with crypto. No US bank wants to face legal trouble with the government. This means that Binance and other crypto exchanges are at risk of losing their US banking partners. Just a few days ago, the international version of Binance announced that they would be suspending both US dollar deposits and withdrawals. Binance didn't provide a specific reason for this change, but if you read between the lines with everything else going on in the crypto space, it's very likely that they lost their US banking partner, so they can't process these US dollar transactions for customers anymore. After all, this is coming not long after Binance announced at the end of January that their US banking partner Signature Bank had increased US dollar transaction minimums to $100,000. This is happening due to Signature Bank pulling back from crypto as it is facing high scrutiny for its past involvement in the space. This prior change of raising the US dollar transaction minimums effectively meant that only customers with large accounts could make transactions at all, and locked out most retail investors from doing anything. Even though US dollar deposits and withdrawals have been frozen, it's important to note that the main Binance exchange does not serve US users, and a Binance representative said that the separate Binance US entity has its own banking partners and does not have any issues. But one has to wonder how long this will be the case for. US banks are quickly exiting the cryptocurrency space, and the US government has made it abundantly clear that they do not trust Binance or crypto at large. If US banking is later removed from the Binance US version of the exchange, this will effectively get rid of the onboarding and offboarding ramp to the platform. In other words, people won't be able to turn crypto into dollars or vice versa. There will be no way to cash out into real US money. In the words of John Reed Stark, a former US Securities and Exchange Commission enforcement official, quote, "It's a very ominous sign for both exchanges and the customers. The bottom line is people are gambling, and if you can't turn chips into cash, you are not going to bother playing the game." End quote. For all of these reasons that I've covered, I would not trust Binance at all. Government regulators are after them, and it seems like only a matter of time until larger action is taken against the company. Binance's history is full of shady events, and the company's extreme secrecy is worrying to say the least, as it seems clear that they are trying to hide something from regulators. And the recent crackdown on cryptocurrency banking is just getting started. Binance's freezing US dollar deposits and withdrawals presents a clear risk to being able to take money off of the exchange, especially if this spreads to Binance US. But be sure to let me know your thoughts on Binance in the comments below, and make sure to subscribe to the channel for more finance content. Thanks.